Hello and welcome to Crypto Weeklies. Today let's analyze Ethereum, conduct AI based forecast and regression analysis for Ether. None of the content is financial advice. The chart that you are looking on the screen is the Ethereum price forecast based on Ethereum's weekly price action starting November 2017. This is the price action for Ether. Right now, Ether is trading at around $2,500 and here's the current tokenomics for Ether. $2,573. That's the current price. The volume is at around 10 billion. Third by volume, second by market cap at around 309 billion. Circulating supply at around 120 million. Total supply about the same. This one does not have a max supply, but what we can check on ultrasound.money is the supply chain change over the last 30 days. This has Ether has burned about 16,000 ETH has been burned, whereas 77,000 has been issued. So net supply chain has been about 60,500, and if you were to simulate proof of work, this would have gone up by about 388,000 instead of just 60,000. So again, still the supply growth since the proof of stake has been has been decent. And if you were to again over here, you can see that right now the supply is growing at around 0.6% year over year, whereas if it were proof of work, it would have been somewhere around 4% inflation year over year. So that's a bit about the current state of Ether. Although one might say that Ether has become inflationary. Again, the rate of inflation is at around 0.61. So this again we'll closely watch for this and provide an update. Per our machine learning based forecast, Ether's price action could see, again not financial levels, between $2,500 to about $2,800. If that is the base case, if there were no significant events between now and end of year. If on the other hand Ether has a great Q4 and the remainder of Q3, the price action could see between $2,700 almost $2,800 to about $4,500 or $4,500. That's close to its prior peak at around $4,700 at a weekly average. In terms of bear case for Ether is between $1,700 and $2,300. Ether did see a slight dip over the last 1 month. You can see at one point the price action was close to 2,200, almost touching the lows at around 2,200, 2,300 from the highs that Ether saw in March from at around 4K. So that's a bit about Ether's price action. If you were to analyze the number of Ether tokens needed to be a Ether millionaire, and assuming the bull case at around 22% year over year growth for Ether, again this we came with this number to normalize the behavior between bear markets and bull market, and say that instead of 1 year being plus 40% and the second year being minus 40%, or 1 year being plus 80%, second year being minus 40%, just why not just normalize it at 22%. Again, this number is not random. We have looked at other major growth trajectories for Bitcoin as well as Ether historically speaking, and this we came with this number. Again, not financial advice. If Ether were to grow for 22% for the next 15 years, the price of 1 ETH could be at around $74,000, which is again close to Bitcoin's all-time high. And in that scenario, the number of Ether token without staking ETH required to be ETH millionaire would be at around 13.3. So this is again just 2040 is just 1 year. 2037, if you are interested in that year, the price in that year per 22% growth would be at around 41k. Number of ETH needed would be at around 24. In 2032, which is again almost 8 years from now, the number of Ether token needed would be around 66 without staking, and the price of ETH could see at around 15,000, 15.2 thousand. That's the AI, so the CAGR based retirement model. In terms of analyzing the regression analysis, right now the price of ETH is coming in at around $2,500. dollars, the fair value per our polynomial regression analysis for ETH at this point is at around $3,800. That means the price is slightly undervalued compared to the fair value. We have used polynomial regression to analyze the price behavior during the bear market, where the price goes down with time, as well as the bull market, where the price goes up with time. Right now we are in a bullish upswing starting again late October 2023. That has been the case for most of the cryptos, where the prices are trending up with time. So per this analysis, the fair value at around 3,800. If you were to get rid of the two standard deviation bands and focus on one standard deviation to identify some of the key levels, you can see the price has a tendency to gravitate back to the one standard deviation floor. In the bear market, again we saw at times price sub $1,000 when the and at that time the one standard deviation floor was at around 1,350, and we quickly rose back to this level. So if this the key level for now to watch is around $2,386, that's where if the price were to go back down to that level, that could provide some support. The fair value and the rally back to the fair value could see a resistance somewhere between slightly under $3,800, and also if the prices were to go back to the one standard deviation peak like they did in March of 2024, that valuation for ETH is coming in at around $6,200. So kind of a lofty rise from where we are. But again, as we move close to the post halving year for Bitcoin, that's when we significantly saw some peaks for Ether. You can see over here in 2021, the first peak around May of 2021. You can see that corresponded to basically a valuation slightly higher than the two standard deviation peak from the fair value regression line. That value for now is at around $10,000, but you can see this this price action has an increasing function. So in 2025 this levels could be slightly higher, based on how Ether performs for the rest of 2024. So this is one level to watch. The next analysis that we'll be presenting is accumulation zones for Ether. Right now the simple moving average based risk for Ether is at around 0.23. Again, per this analysis, is the third best time to accumulate Ether. The best time, again, definitely towards July 2022, when the risk level was between 0 and 0.1. You can see that's where the potential for any mean reversion was the greatest. Per the simple moving average related accumulation strategy, this is one model. This looks at short term price action, and based on the short term bottoms, if the price is in a good accumulation territory. Again, per this model, to summarize, this is the price action. You can see over here today coming in at around $2,573 and risk level at around 0.23. The second model for Ether is the dollar cost average based proportional difference between the price and the polynomial regression based fair value. Per this analysis, this is the second best time to dollar cost average Ether. The risk is between 0.1 and 0.2. You can see over here the risks are kind of in a declining shape. At around 0.19, we in early week of August we did go slightly below 0.18 level. So that is again key to watch. In the course of the bear market, we only had a print of risk between 0 and 0.1 just one or couple of days when the price was sub $1,000. That was again per this model the best time to get in. Again, this is not some retroactively fitted model. This provides information real time as well. So in terms of accessing these charts, you can use cryptoweeklies.com. The link is on the bottom of your screen, and check out these charts for yourself. You don't have to pay or sign up for anything. Per the longer term time weighted average price model, this is again the time weighted average price in blue, and the price is in color coded based on the distance between the proportional distance between the current price and the time weighted average price at any given point. Right now the risk per this analysis, you can see this is again normalized between 0 and 1. The risk is at around middle of the pack at 0.5 per this analysis. That means that and again the corresponding color code is at around green, shades of green. Again, that means it's the third or fourth best time to dollar cost average ether. And this particular model has done a fair job of identifying the peaks both in May of 2021 as well as November of 2021, when the risks, if you were to check out the risk, when the risks were above 0.9, that's when the potential for any blow off top was the highest per this analysis. Right now, the highest that ether went, that is in March of 2024, for this particular bull run, was at around 0.77 risk. So again, a little ways away from the eventual blow off top phase, but again, this provides some perspective on where we are in terms of the bull run. So just to summarize the accumulation related strategies per this longer term time weighted average price, this is the fourth or fifth best time to dollar cost average ETH. For the DCA model, this is the second best time to average DCA ETH. For the SMA model, this is the third best time to DCA ETH. But the regression model, the key level to watch is the 1 standard deviation floor. If there were any further pullbacks, the fair value at around $3,851. Again $1,500 increment between the the 1 standard deviation bottom and the fair value. The current price action for ETH is again at around, still $1,200 to $1,300 away from its fair value, and the 1 standard deviation peak around 6K. So that's a little bit about ETH. If you like this content, please subscribe to the channel. Also give this video a like, and hope to see you again tomorrow. Thank you and have a nice day. Bye bye.